Hello everyone, welcome to Akita's Academy of Accounting and Finance, and today we are going to do what? Revision of our first chapter, that is accounting for partnership. Okay, when I say partnership, what is a partnership? When two or more persons means what? More persons, the limit is 50. Okay, so two or more person agree to carry on a business wherein they share the profit and losses with each other. Agree to carry on a business. Agree means that agreement could be a oral agreement or it could be a written agreement which binds all of them. Okay, there could be a one person acting for all or all of the person acting for one person, right? So that is an agreement which bind together all the partners. Okay, now when I say oral agreement, it is mutually decided between the partners, like how they will share the the profit and loss, interest on capital, interest on drawings. Everything is mutually decided, agreed orally. But when I say there is a written agreement is called what? It is called a partnership deed. In that partnership deed, each and every detail will be mentioned, like what is the name and address of the business, name and address of the partners, how much capital is being invested by the partners, how much interest to be given to the partners, how much interest on drawings to be calculated on the partners drawings amount, how the profit and loss will be shared. If there is a dispute between the partners, how they will try to resolve it, the reconstitution of a partnership firm, like whether there is an admission, retirement or death of a partner, how the partnership firm will get reconstituted. When the partner has got any kind of a loan into the firm, how much interest to be given, everything is mentioned in that partnership deed. But if it is not mentioned, one thing or any of all these things is not mentioned in the partnership deed, then what is mentioned in the Partnership Act 1932? Okay, so there is a Partnership Act 1932 who will decide upon what to do. Okay, so if nothing is mentioned in the partnership deed, what is being said about certain things in the Partnership Act? First and foremost, if nothing is mentioned about the sharing of profit and loss, then profit and loss will be shared equally. First thing. Second thing is interest on capital. Nothing has been specified about the interest on capital in the partnership deed, then you are not supposed to give interest on capital to the partners. Okay. Third thing, interest on drawings. Nothing has been mentioned about the interest on drawings in the partnership deed, then the firm cannot charge interest on their drawings. Fourth thing is about the loan. Okay, if they withdraw, if the partners give loan to the firm, right, then if nothing is mentioned how much interest is to be given on the loan in the partnership deed, then as per the Partnership Act, the firm has to give 6% interest on loan. Moreover, it has been mentioned that if any of the partners carry on the same business on its own, okay, another business he is carrying on, but the same business he is carrying on, then whatever profit he is earning in that business, he has to share with this partnership firm, the partners of this partnership firm. Okay, so these are the things which are being mentioned in the Partnership Act. Now we discussed like how we will prepare the accounts, the financial statements in the books, right? In the sole proprietorship concern, we'll prepare trading account, profit and loss account and balance sheet. But when we talk about partnership firm, there are two things we need to consider. The first is partners capital account. Okay, how we will maintain a partners capital account. Moreover, whatever profit they are earning, how that profit will be distributed among the partners, or whatever transaction is being done with the partners. For that we need to prepare profit and loss appropriation account. Okay, when I say partners capital account, there are two ways to prepare partners capital account. One could be fixed capital method and second could be fluctuating capital method. When I say fixed capital method means then we have to prepare two accounts. Okay, partners fixed capital account, wherein whatever capital they have bring into the business, we will show that amount. There is nothing we have to add in that particular account. but whatever interest we are giving to the partners on the capital, whatever interest we are charging on the drawings, whatever salary, remuneration, commission, interest on loan, whatever we are giving to the partners, for that we will maintain a separate account that will be partners current account. So in fixed capital method, the capital, if additional capital is brought into the business, into the firm, that capital will be there, nothing else. Okay, so the capital will remain the same and capital account will show a credit balance all the time. Okay, but when I say the current account may show a credit balance, may show a debit balance. Okay, when there are certain withdrawal which exceeds the interest on the capital or on the profit, so they may show a debit balance also. Okay, so that's how we will prepare a fixed capital account and current account under fixed capital method. And when I say fluctuating capital method, in fluctuating capital method, no need to prepare separate two accounts. In one account only we will show whatever capital is being invested by the partners, interest being given to the partners on that, salary, remuneration, commission, interest on loan, and whatever drawings they are doing, we debit that drawings. Whatever interest is being charged on that drawings, we will debit it. So all these things we will prepare one account and we will show the effect of each and everything in that particular account. That is a fluctuating capital method. So that's how we will prepare the partners capital account. And what else we have to prepare? We have to prepare profit and loss appropriation account. Now, what is profit and loss appropriation? When the firm has earned profit or when the firm has incurred or sustained certain losses, that is to be distributed among the partners. Okay, that profit will be transferred to profit and loss appropriation account, right? We show net profit. This profit will be transferred to profit and loss appropriation account by net profit. Now this profit and loss appropriation account will show what? From this net profit, if it is mentioned in the partnership deed, then we have to give interest on capital to the partners. How much interest we are giving? If we have to give salary, okay, commission or any kind of remuneration, how much we are giving to the partners, this belongs. This profit and loss appropriation account, in this we will show only and only transaction related to the partners. Okay, nobody else. So salary, commission, if we are charging any interest on drawings, how much interest on drawings are there? So all these things will be mentioned in profit and loss appropriation account. Okay, now you need to remember this one thing. First and foremost, if it is mentioned in the partnership deed, then only you will give interest on capital, salary, commission, remuneration, interest on drawings. Okay, if it is not mentioned, then you are not supposed to give interest on capital or charge interest on drawings or salary, remuneration, commission, anything. First and foremost thing. Secondly, only and only you give these things to the partners only if the firm has earned profit. Okay, if the firm has incurred loss to net loss, then we won't give anything to the partners. We won't give interest, salary, commission or any kind of remuneration to the partners. Okay, even though it is mentioned in the partnership deed. Okay, so there are two things mentioned in the partnership deed we have to give, not mentioned in the partnership deed, then what is mentioned in the partnership act, in that way we need to follow it. When to give these things? Only and only if there is a net profit. If the firm is incurring certain losses, then we are not supposed to give any kind of a interest or salary or remuneration or any kind of a commission to the partners. Okay, now comes the calculation part. Okay, calculation parts means how we will calculate the interest on capital and interest on drawings. Okay, now interest on capital, the partner has brought some capital into the business. Okay, so the firm has to give interest. If for one time only he has got the capitals, and for the whole year the firm has to give interest. But what if there is an additional capital being brought in by the partner? Okay, so when that additional capital is being brought by the partner, from that day till the end of the year, if he brings the capital in the month of, let's say, January, so for the 3 months the firm will give interest on that capital. If he is bringing in the month of, let's say, November, so for 5 months the firm has to give interest on the additional capital for 5 months, and the initial amount invested for the whole year. But let's say the partner is withdrawing certain capital, okay, withdrawing certain capital amount. Let's say he bring in capital of rupees 1 lakh, okay, and he withdraws 20,000 in the month of October, right? So from April to October, the firm will give interest on 1 lakh, right? And from October, the firm will give interest on capital from October to March. This is the amount which on which the firm will give interest, okay. It may so possible that he brought in 1 lakh, okay, in the month of, let's say, July. He brings in additional 50 capital. This is the additional capital, and 20,000 is being withdrawn by him. So how you will calculate? On 1 lakh we will give interest from April to June, okay. So the amount of 1 lakh was from when? From April to June, okay. Then how much when he bring in additional capital? In the month of July. So from 1,50,000 was from where? From July till October. He withdraw the amount in the month of October. So July, August, September, for 3 months the firm was having a capital of 1,50,000, and then he withdraws the amount in the month of October. So 150 minus 20 is how much? 1,30,000, and from October to March we will calculate the interest on 1,30,000, okay. So this is how we will calculate the interest on capital. Now there could be a possibility that in the question you have been given the capital at the end of the year, okay. Now at the end of the year means what has been what is included and excluded in that capital? In that capital, drawings have been excluded, additional capital have been included. If there is a profit, it has been included. If there is a loss, there is no need to give interest on capital, okay. This point you need to remember, okay. I feel like giving these questions like, okay, there is the capital at the end of the year, calculate the interest on capital, and the firm has earned a loss of certain amount. How you will calculate? Obviously you can't give interest on capital on that particular amount. But let's say this has been given, profit has been given, right? So you have been given the capital at the end of the year. Now you have to do the reverse calculation. You want to find out the capital at the beginning, because for the whole year you have to give that particular interest amount, okay. Now if you have been given a certain amount at the end of the year, you need to add the drawings amount to get the capital at the beginning. We need to do the reverse entry. The profit which has been added, we need to deduct that profit amount. The additional capital which has been brought in by the partner, that we need to deduct it, and then we will get the capital at the beginning of the year. Now on that capital we will give the full year's interest, okay. And the additional capital, whenever the additional capital has been brought into the by the partner in the business, on for that period only, from the when he has bring in the additional capital till the end of the year, the firm will give interest, okay. Now this is done. We calculated how to interest on capital, if there is additional capital or withdrawal of capital, and if the capital is being given at the end of the year, how you will calculate all these things. Now comes interest on drawings, okay. Interest on drawings, same way you have to charge interest. Simple method: whenever the partner has withdrawn certain amount from the business for its personal use, when he has withdrawn till the end of the year, the firm can charge interest on that particular drawings. But let's say if it is the withdrawal is only one time, then it's easy to calculate, right? but there are multiple withdrawals. Okay, now that multiple withdrawals could be at a regular interval or it could be at a irregular interval. It could be a fixed amount or it could be a varying amount. Now if it is a varying amount, okay, different amount is being withdrawn by the partner during the year at irregular interval, different point of time. So for that, what we will apply? We will apply a product method. Okay, what does the product method say? How to calculate interest on product as per product method? That is total product. Now when I say total product, means whatever amount withdrawn into number of months, okay, left for number of months remaining to charge the interest. So number of months, then we'll get the total product, okay, into rate upon 100 into 1 by 12. I have explained it in detail why 1 by 12, because the 12 is the denominator which is the same. So here we will multiply the amount which has been withdrawn into the number of months remaining to charge the interest. Okay, this formula when we need to follow when there is a varying amount at irregular intervals. Okay, but let's say there is a fixed amount which is being withdrawn by the partners at a regular interval. Regular interval means what? Monthly, quarterly, half yearly, first half of the year or second half of the year. In that case, which method we will apply? We will apply the average period method. Average period method. What is the formula of average period method to calculate the interest? The total drawings into rate upon 100 into average period divided by 12. How to calculate average period? Number of months remaining after the first drawing plus number of months remaining after the last drawing divided by 2. Okay, this I have given you a full detailed explanation how to calculate. You need to take out the average period. If it is monthly, if it is in the beginning of every month, or if it is in the middle of every month, you need to consider beginning of every month. There are 12 months remaining on which you have to charge interest, and the last drawing is in the month of March, so there is 1 month remaining on which they have to charge interest. So 12 plus 1 divided by 2 is 13 divided by 2, that is average period is 6.5 divided by 12. So that's how we calculate the average period if the withdrawals are regular, okay, at a fixed period, fixed amount at a fixed period. Okay, so monthly it is there, quarterly it is there, that you need to calculate, and I explained the full table, okay, about it. So this is how the average period we will find out when the withdrawals are regular and at a fixed interval. Okay, now let's say if nothing has been mentioned, okay, you have been just given an amount that this much amount has been withdrawn by the partners, then how much interest you will calculate? What is the average period? Interest will be given. What will be the average period? In that case, average periods will be considered as 6. Why 6? Because it has been assumed that every middle of the month, every month the partner is withdrawing an amount. Okay, that is done. Now remaining guarantee of profit and past adjustment. Guarantee of profit means what? Two partners wants another partner to join in their business, but the other person is not ready. He is saying, I want a fixed amount. Okay, what if you incur loss? I also have to incur the loss, but sorry, I don't want to incur a loss. This is the fixed amount I want. So the two partners agree, or one of the partner could agree. Do the two partners agree? Okay, if you want a fixed amount, we will give a fixed amount if the firm is not earning an adequate profit. Okay, if the firm is not earning an adequate profit, then whatever remaining amount we like say 50,000, and the firm has, and you get a share of let's say 30,000, then remaining 20,000 will be shared between both of us. We will give from our profit to you. Okay, or else there could be a case that only one partner decide, I will give you my share. Okay, if you have from the profit, if you get 30,000, then remaining 20,000 I will give it to you. So that is the guarantee of profit which partners decide to give to a new person who has joined in the firm as a partner. Okay, and there is a one case, there is past adjustment. Past adjustments means what? There could be a situation where the firm has omitted to record a certain transaction, or there is a rectification of certain things. There are certain mistakes may happen. What it could be? That the firm omitted to give interest on capital, or the firm omitted to give interest on drawings, the firm forgot to give the interest on the loan amount, or there could be a case that they shared the profit and loss in different ratio, and now there is a time to rectify it. So what you need to do in that case? In that case, first you need to give a net effect of all these, instead of passing to journal entries, debiting the incorrect entry and then crediting the correct entry. What you will give? You will give a net effect of it. You will make a table wherein you will show a statement. This is a statement that shows like whatever rectification the firm has to do. If certain transaction, certain profit, let's say the profit has been wrongly distributed, how you will show? You need to debit that profit. Okay, you need to debit that, you need to rectify the entry. So first what you will do? You will debit the wrong amount which has been credited to the partners, debit the wrong amount. Now what you need to do? Let's say you have to give interest on capital. Give the interest on capital to the partners. Okay, after giving interest on capital, whatever profit, let's say whatever 70,000 is the profit which has been wrongly debited. Okay, you forgot to give interest on capital, give interest on capital 30,000. What is remaining? Now this 40,000 will be credited to the partners as the profit amount. This 40,000 will be credited among the partners. So now you need to give the net effect of these things. This is debit, we have to debit, this we have to debit, this will be credited, 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 this will be credited. Okay, now you need to find out which amount is short and which amount is excess. Debit amount is short, you need to write it like this much amount. Which one is more? You need to write it. This has to be credited. Okay, this has to be credited and this much amount has to be debited. So the third partner account will be debited and the other two partners capital account will be credited. So this is what, this is the net effect which you will show in the books. Okay, one point I forgot to mention it is about the adequate profit on interest on capital. Okay, now if the firm has adequate profit, sufficient profit, and let's say 70,000, same example, 70,000, firm is having an adequate profit. Okay, and the interest on capital is 30,000. So 30,000 will be distributed and then 40,000 will be distributed among the partners at profit sharing ratio. But if the firm is not having an adequate profit? Let's say the firm earns a profit of 15,000. How much interest they are supposed to give? 30,000. But how much is the profit of the firm? 15,000. Now how that 15,000 will be shared as interest on capital? In the ratio of the capital invested by the partners. Okay, so whatever capital is being invested by the partners, in that ratio this 15,000 will be divided among the partners, not in the ratio of profit sharing. Not in the ratio of profit sharing, but the amount invested by the partners, in that ratio this 15,000 will be distributed among the partners. I hope I was able to do the revision of this whole chapter. I hope you got this chapter. In the next chapter there is a reconstitution. Okay, so things will get little bit more tricky in that. So this is the base you need to understand. I hope you got it. Thank you very much.